Hey everyone, long time no see, long time no video. I apologize for being away so long, just been very busy. But just want to give you a quick update on my portfolio and what I'm doing with my portfolio. And really in this video, I just want to talk about some ideas that I think is going to be just very life changing. I think in these times, like Warren Buffett said, it's when the patient investors will make a lot of money and the people who aren't patient are going to be essentially transferring their wealth to those who are patient. And so in today's video, I have a lot to talk about, just some specific strategies, and I just want to get right into it. Okay, so the strategy I'm utilizing now, right now that there's been such a big, down market for so long, and we're entering this recession, and the outlook for 2023 is very uncertain. So I used to play a game called Monopoly, and many of you have probably heard of this game as well. Maybe you've played it in your childhood. And I remember one of the most important aspects of the game of Monopoly is you want to get essentially a monopoly, right? So, you start actually with nothing, and then you acquire properties, and then the strategy is essentially to have 3 or 2 of the same properties of the same color so you can build houses or hotels. And that way, the rent that you collect from other players becomes exponentially higher. Okay, so you essentially build Monopoly so that you can gain money from your opponents, and then you make all the money from your opponents, and then you win the game. Okay, so my strategy is very similar to Monopoly. And the reason why I use this example is because the way I'm allocating my portfolio, the way I am setting up my portfolio is very similar to Monopoly, where essentially I am building properties to collect rent every week or every 2 weeks. And the way this works is you essentially have to have 100 shares of a stock. And these days, with so much uncertainty in the stock market, with the economy, with what's going to happen, I've pretty much gotten to the point where any company that I don't have 100 shares, I've either bumped it up to 100 shares or just got rid of it completely. And the reason why this is so important is because when you have 100 shares or the equivalent of 100 shares, which I've talked about in another video, and that's buying leap options. But these days, because I really can't predict how the market's going to move. There's just so much uncertainty. I'm buying outright 100 shares of companies like Meta, like AMD, like blue chip companies that have been around for long enough, and they have financials that are strong enough to where I'm confident that these companies will not go away anytime soon. On top of that, of course, you also want to take a look into financials, their revenue, their profit margins, and all these are really, really important to figure out, okay, what companies are going to be the ones that are going to come out of this black swan recession just, transforming your financial outlook for, the rest of your life. And while going up or while waiting, whatever the market does, while we're going through this transitional phase, the most important thing, in my opinion, is that you're still making money off of your stocks. Okay, so I'm going to show you exactly how this works. And again, guys, if you like this kind of content, if it's helpful for you at all I ask is for you to like and subscribe if you want to follow for more. But I would just appreciate if you hit that like button. Okay, so let me show you how this works. Okay, so I'm going to go through a couple of stocks, and this is not, every stock in my portfolio, but, just a couple companies that I've picked out to where I believe they are fantastic options for not only solid companies that have strong financials, strong fundamentals, but they also have the ability to make you passive income by selling weekly or bi-weekly call options. Okay, and if you don't know what selling call options means, it's okay, follow my channel. I talk a lot about the wheel strategy, about options, about basically how options can be very risky or can be very, very safe. It can actually hedge your portfolio and make you money no matter if the stocks go up or down. And that's the beauty of options, is that there is actually a safe way to use options, right? Most people go into options thinking that you have to buy call options, and if it doesn't make you money, then you lose all your money. But that's not how it works, right? And again, but I don't want to talk too much about that today. Let's just get right into it. So let's take a look at this first company, right? Devon Energy. It's one of the dividend aristocrats, meaning that has paid a consistent dividend over the last, over a decade, and it's a company that is in the oil and gas industry. Definitely one of the companies that I would not mind owning for the long term. Sure, oil and gas is going down. That's something that we all know, but nonetheless, this company is a solid company, I believe, in the oil and gas industry, and so I bought 100 shares of a Devon stock, DVN stock, right? And if I go into my Robinhood account, and again, this is just my small account where I do a little bit of trading, but not too much. Right now, if I sell a call option out just a week, okay, so this means that if before or by December 16th, if the stock goes up to a certain price, I would have to sell all my 100 shares of Devon stock, right? But I collect premium on the upside. And this essentially hedges my portfolio or my position, because if the stock goes down, I collect premium. And so I'm making money on the way down. If the stock goes up, I collect the premium, right? And I also collect the money of the stock that the stock price that went up. Okay, so basically the difference of the stock price now and the stock price of when it goes up. And the only downside really to the strategy is if the stock pops up a lot, because then you miss out on some of the gains, right? But I'm okay with that. I'm not greedy. I'm totally fine with selling the stock and making $300 plus collecting $65. So that's essentially selling call options. If you have 100 shares or a leap option, you can sell a call option against it, and that hedges your position on the downside or on the upside. Okay, so you make money either way. And to me, guys, this is basically like Monopoly. You're collecting rent no matter what the stock does, right? The only time that you actually lose money is if the stock moves more or less up or down. Okay, so if it has bigger changes, then you don't collect as much, but you're still offsetting a lot of your loss. Okay, so that's essentially the position I have for Devon stock. So let's talk about a couple other positions, and I want to show you how it works similarly. And then before I wrap up this video, I want to talk about one more strategy I'm using, and that's selling put options. Okay, so but before that, one of the other stocks that I really like right now is Meta. Okay, so Meta stock has gone up in the last month. It's gone up about 20%. So it's been sneaking up ever since the big drop. And one of the things I really like about Meta is, yes, even though there's so much uncertainty, Wall Street hates Meta. The fact that they've invested so much money in the metaverse, the fact that they've hired 14,000 employees, and their revenue has actually gone up this year, but their profit margins have gone down significantly, about half, right? So that's insane to think about how Facebook or Meta, their revenue has grown, but their profit margins have reduced so much. And that's the reason why the stock is down so much. But Meta is making a ton of money with, WhatsApp, with, Facebook, with, Instagram. And there's so much potential, even if the metaverse doesn't work out, right? There's so much potential for Meta to really continue to grow its revenue. They've laid off a lot of employees, and so there's definitely plans within the company to be more profitable in the upcoming years. And I don't know if it's by 2023 or 2024, but I do think this stock is going to be well over $300 per share in a couple of years. That's my opinion, not any kind of financial advice or not any kind of fortune teller. But let me show you how this strategy works, right? And I have a pretty significant position in Meta, right? And right now, if you buy 100 Meta shares, yes, it's going to cost a little more money. It's going to cost about $11,000, but you can also buy leap options. Again, I covered that in a separate video. But let's say you have 100 shares of Meta, right? And if you sell out to about a week, you can collect, $200, $300 just in a week, right? And if you do that consistently, if you do that every single week for 4 weeks, that's well over $1,000 a month. And yes, even though Meta may not stay the same, even though you may see fluctuations between then, you're gonna make that premium just by selling call options against it, right? The ideal, of course, is if Meta doesn't go anywhere, then you're just collecting premiums. But even if it moves significantly up, which it has in the past month, you can always close out the options earlier. You would still secure the gains from your shares, but you would lose money on any money that you would have had above the strike price that you sold against. Okay, so let's say I sell right now the call option at $117. If it goes up to $118, right? At that point, my call option would be in the red because I would have gained more money had I not sold that call option. But the nice thing about selling call options against your position is it hedges your position if the stock goes down. And that's the biggest upside to the strategy, is that you're making money on the upside or downside, and the only time you really lose out is if the stock goes up by a lot or the stock goes down by a lot. Okay, so let me show you one more stock that I am selling selling call options against, and that is, okay, I was going to show you another oil, but since I've already showed you an oil company, I'm going to show you a semiconductor company. Okay, so recently, Warren Buffett, the mogul of investing, is invested into TSMC, so Taiwan Semiconductor Manufacturing Company. So it is such a big company. I think I read this morning that they're invested $40 billion into their Arizona plant because there is some uncertainty with some of the conflict going on in China, Taiwan. But honestly, guys, like, I've been in Taiwan for quite a long time, and the sentiment here, for those of you who are not from Taiwan, who have not lived in Taiwan, is that yes, even though there's a lot of sentiment from China that they want to take over and that they're going to do this and this, guys, the reality that we know from China is that there's much easier ways to take over Taiwan than an all outright conflict, right? They don't need to send hundreds of thousands of troops to Taiwan to try and take over this tiny little island. They don't even need to send warplanes, right? They do that as a scare tactic. And again, I don't want to get too political, but I'm just explaining the reason why I don't mind investing into this Warren Buffett backed semiconductor companies, because the conflict that a lot of people are scared about is really not that big of a deal in Taiwan, and that's because there's economic ways of taking over Taiwan, right? And sure, if China does take over Taiwan and through economic means or whatever means they use, right, it's not going to be as brutal as most people think. Now, is that a for sure prediction or for sure outcome? Of course not, right? Anything can still happen. We don't even know if it will exist tomorrow. But I'm willing to bet into TSMC because I don't see that conflict as big as it seems. Okay, so right now, if we buy 100 shares of TSM, we're going to do the same thing. We're going to sell call options against it. And so it costs about $8,000 to buy 100 shares, but you can collect. Let's say we sell it out a week. Again, this is just a week, guys. You can, if you want to play a little safer, you can sell 2 weeks. You can sell a month, right? But I'm selling weekly because I think I wouldn't mind collecting the premium that I can get from a week. So let's say I sell it out to, I don't know, $83. That's about $3 above the current share price. I'm collecting $70 per week on this stock, right? And in a month, that's $140. That's $280 per month just on this position. And if stock goes up, I'm still making the profit from 83 to 79.80. So that's about $300 plus the premium I collect. If it goes down, then I simply collect the premiums. And to me, guys, this is a very, very good strategy, especially if we can't predict where the market's going to go, where the stocks are going to go. But so long as you choose companies that are strong, that have strong balance sheets, that are still making great money, then you're going to be all right. Okay, so lastly, I'm going to close with just one more strategy I'm still doing, and that's selling put options. Okay, so put options, again, if you don't know, I cover it in my channel, is where essentially you can sell options and you have to have the cash to buy the stock if it goes down. So in other words, this is the cash secured put strategy. So if I sell a cash secured put on DVN, going back to the original stock that I started out with, out just a week, right? I can collect about $200 off of a collateral of $6,300. So meaning that if the stock goes down to $63, I would have to buy 100 shares, but I would be getting a discount on the stock and I will be collecting a premium. And the beauty about this is once I am assigned the stock, once I have 100 shares of the stock, I can do exactly what I was doing at the beginning of this video, and I can sell call options against it. Guys, option strategies is going to change your life. You're going to be making great money on the downside or the upside. And I think that's the beauty of using options if you know how to use it well. And again, this is just one of the strategies that I'm using myself. And I like to think about this as the game of Monopoly, right? You're collecting rent every single week. If you build your position out to where you're collecting rent on, fantastic companies that have a long-term great trajectory, then you're going to be making a lot of money in between. And when the stock goes up, you're going to be making, you would have made a lot of money as well. Okay, guys, again, if you like this content, make sure you hit the like button. I would really appreciate that. Subscribe if you haven't already. Thanks so much for watching, guys, and we'll see you around in the next video.